Hey traders, John Howell here. Today we're going to be looking at the stock market. Pretty big reversal in the markets today. We actually had a lot of selling, but the buyers came right back in towards the end of the day to really close strong. I'm going to give you a bit of an update through there. Plus also, I'm going to be covering the gold and silver market as well too. Gold might be completing that V bottom very, very soon. So just want to share some things with you, some things that we should keep an eye for. Let's get straight into it. Don't place a trade based on what you'll see in this video because there is no guarantees of making a profit in the market. It takes you a long time to become a good trader. So this video here is just to educate you to become a much better trader. Alrighty traders, if you haven't done so yet, make sure you grab that free, I'm giving away free access to my trading course. There should be a link in the description. There's 4 phases there, and I know you're going to absolutely love it. If you're struggling with your trading right now, you're looking to learn how to read the charts, trading systems more, link in the description or go to johnsfreegift.com. Now, let's get straight into the Dow Jones. The Dow Jones right now, look what's happened here with the Dow Jones. Firstly, we can see that we're starting, notice my moving average here. This moving average is what we call the 20 moving average. Okay, so this is just a 20 moving average on the charts. There's a few moving averages that I like to use myself. One is a 52 moving average and the other one is just a 20. And so we can see here with the 20 moving average, notice how we're starting to really, we notice how that the moving average here was pretty flat. Notice how it was just like really flat, right? And this is, so the moving average really gives you a gauge of where the strength is in the markets. Is it up, is it down, or is it nowhere? So if the moving average overall is flat, overall, as you can see here, so there's no like what we call the stream. If you think about the moving average as like a stream, whenever I'm getting into a trade, I love to have the stream with me. Think about the moving average as in like, okay, you're looking at a river, right? And if the river is going like this, if it's just streaming to the upside, well, the best thing to do as a surfer, right? The best thing to do as a surfer would be, let me just turn that off. The best thing to do as a surfer, right, is that we are just on the sidelines right here. We're just right here, and all we're doing is we're looking for the perfect time to jump in, and we're looking for the market to take us with us. We're not looking to fight the market. Whereas when the best highest probability trades, right, it's going with the stream, and so the stream to me is like a moving average. So if we have a moving average that the stream is starting to pick up like it is here, as you can see, right, the stream was actually pretty flat. All right, not much going on through here. So if you jumped in here, if you're a surfer and you're looking to try to jump on a wave and you jumped in here, guess what? You're probably just going to sit there, aren't you? No, it's not really going to take you anywhere. But if you look at the market as looking at the moving average overall, not where it's pointing, I don't care about here. I just look at the overall direction. And you can see how the stream is starting to pick up. So therefore, as a surfer, we're like, cool, right? We're starting to get some what do the surfers call it? For all my surfing friends, put a comment in the section below. What do they call it? Is it a break? Something like that. Anyway, it's like, okay, we're seeing that, they're seeing that, okay, there's some pretty good waves we can jump on, right? Because there's some nice streams here, nice waves. So we're looking to find the right wave, the jump in, and we're looking for the wave to take us, aren't we? That's what the moving average does. It's not always like that. It's not. We don't just jump in anywhere. But I always like to use the moving average. Okay, then if the moving average is trending up, that means we have a strong move. The market is very strong and trending that way. And if I use, say, the weekly chart here as an example, see how this is an example on the Dow Jones here. But notice how the stream overall on this weekly chart, ever since we had the good old the vid situation, right? Notice how the stream has been very strong to the upside. So therefore, any pullback has been bought into. Any pullback has been bought into. Any pullback has been bought into. Because guess what? The stream, the overall stream, is to the upside. So therefore, the highest probability would be to wait for a pullback, jump in, wait for a pullback, jump in, wait for a pullback and jump in, right? So you can design, excuse me, you can design your own plan around that if you want to, but it's just one of the reasons why I use a moving average and how I think about the moving average in the market itself. Now, when you're looking at the moving averages, obviously the shorter the moving average, the more volatile it's going to be, right? So if you use like a 5 moving average, it's going to be very, 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 very close to the price action. If you use a 20 moving average, the 20 moving average is like the average over 1 month, right? And then I also use a 52 moving average. So that's for, like, we're looking at, what's that, 30, 60 days. That's probably about 2 to 3 months worth of trading time. So the 20 moving average is really good, right? Because it gives me the averages of what's really happening, like over the course of a month. And if I can see how the short term, the real short term is going from flat to now starting to trend up, it tells me that the stream now is really, the stream is now starting to pick up in this direction. And we can see what's actually happened here as well. We can see how we had a bit of a pullback and now we rallied up. And look what happened here. We rallied, came all the way down, and then the buyers brought it all the way back up and closed there as well too. If we have a look at this hourly chart, you can see what happened here. For some reason, that the market actually opened, and then the market actually dropped down pretty hard. As you can see, it dropped down. And then what happened is the market actually then spent the whole time rallying right back up. That's how much strength is behind these markets. So I wouldn't want to be fighting these markets right now. Not when it comes to how much liquidity is on the sidelines and how much the Fed is still pumping into this here. So I'm actually, to me, when it comes to these overall markets, and there's a very, 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 very sort of this very, very, very strong bar, I still see probably this being a 40,000 print by the end of this year. What do we have here? We're August, September, October, November, December. So we still have 4 months. I still see the market getting up there at 40,000. The S&P 500, same thing as well too. Look at the S&P 500. S&P 500, just a very nice. Look at the S&P 500 stream. Right, the S&P 500. Look at this beautiful, beautiful stream. Right, think about, like, as I said before, stream, and so therefore, let's look at this here. Look how beautiful that stream is. Look at the overall stream through there. No wonder. Every time we had a bit of a pullback, there was a beautiful time to get your surfboard on and go for another wave. Bit of a pullback, beautiful time to get your surfboard on, wave. Pullback, beautiful time to get your surfboard on, and away we go. Right. And as a surfer, guess what? We're looking for what? We're looking for the breaks, right? We're looking for that break for the wave to start again, right? We're not looking to jump in as the wave's ending, are we? No, we're looking for the wave to start, and this is when the wave starts, this is when the wave starts, and so on and so forth. And look what happened here as well too. We rallied down, came all the way back up, and closed high. Very, very strong in the market. So once again, let me bring up, say, a 15-minute chart here so I can dig deep. You can see here that actually gapped down, and then we rallied down, but look what happened here. We came all the way back up and we rallied all the way back up. Very, very, very strong. And the last 15 minutes closed really, really strong towards the close there. So we can see how really, really, really strong there. So once again, guys, I see Dow Jones 40,000 is my target. The S&P 500, my first target is 5,000. And then my second target is 5,400 for 5,400. That's actually quite. I'm pretty confident about the 5,000 one, but 5,400. That's still like a 20% to the upside. That's pretty high. But again, guys, I don't know. My investing position, I've been long these markets for quite some time now. The Dow Jones and the S&P 500 and the Nasdaq. And until the market tells me that that's no longer valid anymore, I'm just going to be staying long when it comes to my investing positions there. And looking at the Nasdaq as well too. Look what happened to the Nasdaq. Nasdaq, very nice movement to the upside, but look what's happening here. We're sort of just, let me take that off the screen there for a minute. You can see how that we've had a low, we've had some sort of a higher low, but look what's happening here, right? We've still got a pretty nice, we've got a bit of a sideways phase through here. Okay, and look at this here. We've still got a pretty nice sort of moving average coming through here. We had a bit of a moving average through there, and then that through there. So we've still got a very nice moving average. It's not as strong, but it does look like we're sort of hovering around here. So if we could start to get like a bit of a breakout to the upside, if we get something like this coming like that moving forward, we get something like that on the close there, then that's probably going to be a really nice, sort of wave, right? Get your surfboard ready, guys. Now, obviously, there's no guarantees of any trade making a profit, so you always got to be careful of the risk, right? But we can see here that firstly, we can see the stream, but then guess what? We had a bit of a pullback low, rallied up, and then we came down. This could be another little high low before we break out and go for another run again. Now, I'm already long the Nasdaq. I've been long the Nasdaq for quite some time because I've seen this. And if you've been watching my YouTube videos, even on my main YouTube channel, about a month ago, I gave projections on the Nasdaq, and I see the Nasdaq hitting 17,000 by the end of this year. Hence, and the reason why I am still long, and I have been long. Let me actually bring up the QQQ. I got long on the breakout. There was this resistance level here, and once we actually started the breakout, then guess what? I stayed long these markets. And look what's happening with the QQQ. Where is the stream of the QQQ, right? Even though we're getting a sideways phase, look at this. Look at the stream. Very, very nicely to the upside. Very, very overall and very, very nicely. That was the stream through there, and then that's the stream through there. So it's still very nicely. It is slowing. It's not as strong as it was through here. As you can see, that was very, very strong. Then it sort of got a little bit weaker, but we are still slowly trending to the upside. So I wouldn't be too surprised if we did see a little bit of a breakout moving forward into tomorrow. Especially look at this volume here as well too. So a bit of a sideways range here on the QQQ. Once again, so I wouldn't be too surprised to see that the Nasdaq actually had a bit of a breakout. Now, I used to be a day trader, and meaning like I used to day trade, and one of my most favorite trading patterns was what we're looking at here is where the market this is yesterday, and then the market would open, rally down, come all the way back up like that. That might have been yesterday like that, and then close there. And that was actually one of my most favorite trading patterns. And what I used to do is for a day trade, I say, okay, if the market pulls back to here, so if we pull back to this level here, which is also the low of the previous day, I want to be long. My stop's here because if the market does pull back, we're now likely to do something like that. So if you're looking for a day trade, we can see how that this low here, which was yesterday's low, is looks like it's going to be, some sort of as you can see, some sort of maybe a good buying point there. I'm not telling you to buy there, guys, but it does look like that as well too. So let's have a look here. I'm just going to the daily charts here. So same for the Nasdaq. The Nasdaq, the day before, so the Nasdaq, a really good buying opportunity for the Nasdaq would have been down through here. So if the market did pull back through there, that'd be a buying opportunity. S&P 500, you can see how this was the low of the previous day, so that'll be a buying opportunity with a stop below the low. And the Dow Jones, same sort of thing. That's where you'd probably buy it from there, and stop below the low, and then you'd probably see a movement to the upside. That's what I'm seeing through there, guys. So really big, a really big sort of. There's a lot of stuff that's happening right now with the markets, guys, and there's so much you can learn just from the charts itself. I think most of the time in my trading career that I spent a lot of my time trying to focus on the indicators. What are the indicators telling me? But as you can see, if you've been watching my videos for quite some time, you know that there's a lot of information we can get from the chart itself. Move over now through to the gold market. And the interesting thing that I'm noticing about the gold market is that we actually had a lot of support through here. A lot of support, right? A lot of support. And now look what's happening here, right? We're in this little like, is this going to be some sort of V bottom or is it not? And it's going to be really, 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 really interesting to see what's going on here. We're getting a move down, and now we're getting this strong move back up again. So we haven't completed it yet. What I want to see out of this is I want to see a continued move up, strong move up, and then I'd want to see a weak pullback. Let me show you an example of what I'm talking about here, because there was a forex market that I'm looking to trade right now. I'll give you an example. All right, so here we go. So this here is what This is an example of I'm looking at trading this on a forex market, and the reason why is because guess what? We have the V bottom, but what I'm looking for here, what I got here, this is the Great British Pound USD, the Great British Pound USD dollar. But look what we have here. We have what? We have a move down, and then we have a strong move back up. See that through there? So this is what I'm looking for with gold first. And then I want to see this period like here. See how we've got a very sort of flag formation, a weak pullback? That's what this is what I want to see with gold. This will give me the confidence, because then when we start to do something like this, break out, then now we've got a low, especially high, and a higher low, and then a breakout. So looking at, for example, looking at the Great British Pound, if we got something like that, there's a high probability we're likely to say make a move at least back up towards the highs up here when it comes to the Great British Pound. But see, this is the pattern, right? Move down, we're looking for a strong move up, and then I'm looking for a weak pullback to confirm that this is some sort of change in trend when it comes to the gold price. So we move down, I'm still looking for that same pattern when it comes to the gold market. Maybe over now through to the silver market. The silver market's actually a bit different. We're not getting any V bottoms at all. It's just a very strong lower high, lower high, lower high, lower high. Very strong streaming, very strong trend on the downside. So we're not getting any buying movement out of this at all. We're not getting, obviously, nothing happened here. So the trend is still down. For the buying movement to really, for the buyers to start to come back into control, I want to see it get back above this long-term trend line here, which is also the last low around this level here, which is around that sort of $24 level, $24.50 level. I want to see silver get back above here. If we can get back above the moving average and my long-term resistance line, and we start to do that, then that's probably going to change the tune in silver. So there we go, guys. There's a little update for you. V bottom, but also the stream. Remember that, guys. The stream is such a big thing to do. And it's just all about stacking the odds of your side of having a successful trade. And these are the things that I use when I'm looking to trade the markets. Have a great day, guys. Hey traders, I'm giving away 100% free access to my brand new breakthrough full trading course. This is 8 videos over 10 hours of pure amazing and powerful strategies. This is my most powerful systems and strategies that I've used for the last 16 years, and I'm giving it away for free. So this is what I want you to do right now. I want you to go to johnsfreegift.com, or there should be a link around here somewhere, a button or in the description or somewhere in there. Click on that and you can go get free access to my brand new breakthrough trading course. So go to johnsfreegift.com right now. Go to that right now, guys. You can get full, complete, free membership access. Go do that right now.